welcome to another wonderful episode, Focus in Finance. My name is Shirley Luu, your host for the day. Wow, you know what? The month of April has been an incredible journey, taking you guys through finances and things like that. So what I did was, the last episode I did a teaser on you guys. My teaser was, okay, how do you convert your 401k, IRA, and everything else into a tax-free strategy so that you don't have to pay Uncle Sam truly at the highest tax bracket when you retire down the road, okay? Now, let's continue on. As you know, the last time I mentioned to you, went through the step, taking 401k, convert to an IRA, and then from an IRA to either stream of income or growth, or both, okay? So, down the road, let's say at the time when you do your money rollover, and you may say, okay, I know I have to pay taxes on this because whatever withdrawal, whatever income I get out of this, Uncle Sam is going to say to you, I want my money. And at that time, your question to him is, well, how much money do I give you? Well, Uncle Sam's going to say to you, well, it depends. Okay, at the point of getting that money out, it depends where the economy is. Do we have money? Are we in big trouble? Is there Social Security available? Are we in big debt? Have we got to pay off our debt? Are we not? Where do I get money to fund these kind of things? So I, as Uncle Sam, make a decision, you know what? I may have to raise taxes just a little bit. You know, right now, you guys know that most people are paying 30%, 35%. So what if I raise up to 40%? So whatever money you get out of your account, you get hit with 40%. What is it, 30 or 20, okay? So 40% or 30%, if you take $10,000 out, a withdrawal from your 401k or IRA, imagine you get hit with 40%. Look, most of you today are already at 35%, okay? But imagine, I'm talking about down the road, 10 down the road, when the taxes goes up higher, you're paying 40% on your money. On a $10,000, that means you pay Uncle Sam $4,000. That means your family bring him net $6,000. Now, how would you like to say, okay, you know what, Uncle, I like you, but I don't want to pay you this kind of money down the road. I want to be in a position where I want the full amount, $10,000, where I don't have to pay you the $4,000. You know how that's done? Are you ready? Okay, so you negotiate with your uncle, and you say, okay, Uncle, so here's what I do. I just converted $200,000 of my 401k over. Well, how do I get tax-free from you in the future so that you don't come bug me anymore? And how do I get money grow as high as I can, or even guarantee income on that, where I don't have to pay you any money at all when I take the money out? The only way you can be able to do this, you do what's called Roth conversion. The cool thing is the Roth conversion it allows you take your 401k and IRA, convert it into a Roth. But how you do that is this. Your uncle says to you, okay, you want tax-free? Here's the catch. The catch is, today we're currently at this lowest tax bracket. You pay me the money now on your $200,000 before it grows crazy, before it has guaranteed income or any of that. Then in the future, once you pay your taxes now with me, your money is tax-free 100%. Now, I'll give you an example. I had a gentleman that was going into a lifetime stream of income down the road. He didn't need the money right away. It was like 8 years down the road. And he found out that time, 8 years down the road, he was going to get a check about $30,000, $40,000, okay? With that kind of money that's coming to him, he doesn't want to pay the taxes on that, so he went to his tax accountant today, and they say, what does it cost me to convert that 401k of mine into a Roth? Now, based on his tax bracket and deduction and things like that he had, in this particular case, his tax accountant said, well, it looks like you're going to have to cough up about $18,000 from somewhere to pay your Uncle Sam right now. He said, oh, okay. So what we did, he saw there was another account that he had in the mutual fund that could grow, but it could make, I could lose money. And he said, you know what, I'm done with it. So he liquidated, in this particular case, one of his account, paid the taxes to Uncle Sam. Now, in your mind, you say, whoa, wait a minute. He just liquidated $18,000 from another investment account that could have grown him more money, and you just told him to take that money and pay the Uncle Sam tax. Sure did. Sure did. Because you know what I did? When we took his $200,000, we rolled it over to an account that has guaranteed income. One of the company gave him back 10% bonus. So you know what? Yeah, shame on me. I made him liquidate $18,000, but he just received $20,000 back credit to his account. Did he lose? I don't think so. I think he made a profit out of that. So now his account has $220,000 over with the new conversion that we just did. But you know what's beautiful about that? The way we did, the minute we did the Roth conversion, starting that day, within 5 years from now, which he didn't plan to take the money out to 7 years, his stream of income that he's getting from his account, every single year, it is 100% tax-free. Let me repeat. He could liquidate the entire withdrawal. I don't care. I could care less. And if that $220,000 grew to be $300,000, it's all tax-free. He could leave that $300,000 there and get a stream of income from that, getting a check $20,000 a year. It is tax-free every single year, forever. Then he said, okay, that's fantastic because of the bonus and all the things that we did with getting a stream of income. He said, assuming if I didn't get the bonus and all that, the money that I save on the taxes, remember earlier when you take $20,000 a year out, or let's say $10,000 a year out, you're paying 40% in taxes? That's $4,000. Do you know that within 4 or 5 years, he would have recuperated all the money that he would have used to pay the taxes now? Imagine that. From that time on, he gets it for free. No matter how you slice the bread, no matter how you look at it, is tax advantage, tax free. So for those of you who could afford to do that, great. But for those of you who said, hey, Shirley, it's too big or steep, I don't have that kind of money laying around, then keep it where it is. You just pay Uncle Sam the taxes down the road when you have it. And by the way, these Roth conversion that Shirley shared with you is not that you got to come up with all the money one time. No, you do not. Let me make it very clear. You do not. Let's say you have $200,000 and you can only convert. You can do what's called partial conversion. And by the way, not all company does it, so you have to be very careful. Some does it, some don't. But if you find a company that do partial conversion, and you said, okay, I can pay $20,000 in taxes, so I have $200K, let's convert $20,000 of it into a Roth, and let's say that Roth conversion, that $20,000 may cost you $3,000. Well, do you have $3,000 around, right? So you pay $3,000 to Uncle Sam, convert that $20,000. Now you have still $180,000 in a regular traditional one, and you have $2,000 in a Roth. Then maybe next year you do another $20,000. All I'm saying to you is that look at your budget and finance and try to figure out, well, how much can I convert? And it's easy to find out how much you can convert based on your evaluation, on your assessment, on your retirement and your money and all that. But it's important that you have to do part of the cleanup and do an assessment. Okay, do I have retirement money? And if I do, where's it coming from? Is it taxable or not taxable? Do I want tax advantage on that? Okay, do I have, besides having retirement, because it's intended for my retirement, do I have things like called living benefits? Long-term care. Most people I find that don't have long-term care. Do you have disability? Do you have the chronic, the critical? People around you, your mom and dad, look at it, guys. They're going to get into health issues where they may need long-term care. Stroke, Alzheimer, dementia, all these crazy things that could happen to the best of us, you and I. Where's that money coming from? Don't tell me it's from your 401k or your IRA, okay? Because that's intended for your retirement. But most people, what they're doing is that they're liquidating those money to pay for the expense that they have today. All right? And then you want to look at, okay, well, do I have anything else for my retirement? Do I have Social Security? Do I have a pension plan? Most pension plans are gone. There are very few of those dinosaur accounts left today. But then, wow, I'm still young enough now. I hear this on television. Do I have a 5-year retirement plan? I haven't talked a lot about the 5-year retirement plan, have I? Oh my gosh, it would take a whole episode for me to tell you what the 5-year retirement plan is. But I will tell you this, Go look my book on Amazon. IUL ASAP. Let me repeat on Amazon. Or you can Google it. IUL ASAP. And in that book, in the last chapter, it talks about the 5-year retirement plan. Now, how cool is that you heard about the 5-year retirement plan? Well, when I said to you that, what do I mean by that? Well, imagine having an account where you put money in for the next 5 years and you are done. You don't have to put any more. You are now set for life. I opened this 5-year retirement plan for my daughter. I tell you, when she was 18, she's graduating this year, and I don't have to worry another day in my life. She is now set with millions of dollars of tax-free strategy retirement because I implemented the 5-year retirement plan. Now, maybe the next chapter, maybe the next episode, I will tell you what those are. But for right now, this month, I just want to focus on, in your retirement plan and see how we can take advantage of the benefit. Again, love to talk to you, love to connect with you, and love to share with you a lot more detailed information. My name is Shirley Luu. Again, you can find me on Shirley Luu Associates. My contact is 703-608-1203. But more importantly, please, please, please take a look at your finance. And, we're here to try to help you and strategize how to have the best advantages of retirement out there. And I tell you, some of you guys, if I can't beat your current plan, I'll treat you to dinner of your choice. How's that? That's how confident I am. Again, I wish you guys, happy cleaning your finances. And until next time when we meet, I believe there's a great advantages to everything that you've learning on this TV show. I love Fox 5 Plus because they are incredible, bringing this education on a massive scale for you guys. Don't just watch, you guys. Take action. It's one thing to watch the show and looking at that, but you don't take action. And not only that, once you take action, you got to implement the stuff. These things are coming at you at no cost, no charge, and you're learning this. So until next time, Shirley Luu, and I've always loved the saying, we rise by uplifting other. Remember that.